Good morning. Here we are with payroll calculation. I think this is the fun part of accounting, so let's go through this quickly. Hopefully it'll help you get some of the terminology. We will go over this in class also with the handout I gave you. So here we go. We're going to look at payroll and payroll taxes. Why is this important? Well, there's a lot of money in payroll. And it's also related to our net income for most companies. It is subject to federal and state regulations, so you don't want to get into trouble with the laws or auditors. And it's really very important to make sure your employees are paid correctly. Happy employees tend to keep you in business, and unhappy employees tend to put you out of business. We're going to look at two aspects here. First is the calculation, which is what the employer does, and you want to keep track of the liabilities that are related to that. And the second part of it is the payroll tax expense to the employer, which will involve Social Security taxes, Medicare taxes, and unemployment taxes, both to the federal and the state. So there's two sets of entries that are going to be required. So I'll try to get through these so it's not too confusing. You need to understand terminology. A salary usually is a guaranteed amount each week. It doesn't matter the number of hours you worked, and it's usually for managerial or administrative services. Wages are usually for manual labor, or I wouldn't even call it manual labor, I would call it hourly wages, hourly rates, where you are paid so much for each hour that you work. There is a distinction there. We're going to look at a gentleman who's employed for a supply company. He's being paid $34 an hour, plus he gets overtime at 1.5, everything over 40 hours, which is a typical condition of work. And he worked 42 hours this week. So his regular calculation is 40 hours at $34, so it comes to $1,360. Now you have to deal with his overtime. So if you multiply $34 times 1.5 times, you'll come up with $51. You had 2 hours, right? 2 hours times $51 makes it $102 in overtime pay. So he has a total earnings of $1,462. That is fairly obvious here. Now we start to look at what we have to deduct. What we saw was that $1,462 is called gross pay. Now we need to figure out the net pay, which is what he will actually take home or put in his bank. He filled out a W-4, and I believe everybody's familiar with a W-4. Wherever you work, you have to fill this out to explain how many deductions you have. In this case, he has one deduction, and according to the tax tables, one deduction is worth $70. So to figure his federal income tax, you have to deduct that $70 from his gross pay and come up with his taxable weekly income for federal taxes. And that will take you to this handy-dandy little table, which can be really confusing. So first of all, you find out where he falls, 704 to 1,648. So he's right in the middle there. So what this tells you is his tax is going to be $91.40 plus 25% over $704. So you will take his amount, subtract the $704, and multiply that times 25% and add it to the $91.40. It's convoluted, but that's how we do it. The next thing that you have to look at would be the federal FICA, it's called, and two deductions: Social Security, which is the retirement, and Medicare, which is the health care. And the totals right now, or the multiples that we're using right now, are 6% for Social Security and 1.5 for the Medicare. And this turns out to look like this. Now you're going to take his gross amount, not his federal taxable amount, multiply that times 6%, and you'll take that same amount here and multiply it times 1.5 for the Medicare. After all is said and done, here is his net pay. He made this $1,462. His Social Security tax was $87.72. His Medicare $21.93. His federal income tax after the calculations was $263.40. He also is having deductions for another retirement savings, and he contributes to the United Fund. So that totals up to $398.05 that are deducted. And his net pay is $1,063.95. Be nice if you could take that home. But we have these. That's how you calculate the income tax that, or the deductions that come out of the employer's gross pay. Now, the other area that we have to worry about as accountants is the liability for the employer's payroll taxes. Not only does the employee pay Social Security, but the employer does too. He's going to pay the same amount as the employee pays. So those are two tax liabilities that have to be figured. An additional one is the federal unemployment, which is 5.4%, and the state unemployment, which I believe is 0.7%. So those have to be multiplied out, and you will create an expense account for those with payables out so that they show as short-term liabilities. So in essence, what it amounts to, liability for employer payroll taxes. First of all, the business will have expenses, and the employee will have payables to the government. So those responsibilities lie on both sides. And that's a very short, quick overview of how to calculate payroll taxes. The next thing we'll look at is all the components of the payroll. So, and we will go over this in class. So I'll see you in class Wednesday.